Welcome back on AML study by Sohail. Today I am going to explain what is the economic and social consequences of money laundering how affect on the countries and social how can affect socially and it will what is the impact on the budgeting of the countries their decisions regarding to economy and their different internal issues. How can money laundering affect their decisions and how can countries did mistake due to money launderings and how can they not take a correct measure accordingly and they did not perform as per their predictions. So these are I will explain to them. So in the start I just want to explain tell you how effective the large and developed financial centers are also vulnerable to money laundering due to large volume of transaction that allow the launderer to blend in and the wide range of services that enable the launderer to conduct transaction in a way that is convenient. So this is the one of the biggest example. Once money launderer have a legitimate businesses, he earn money from illegal resources and he blend the money in legitimate businesses. And if any regulatory body and any other financial institute ask the question, he she just present the legitimate resources, but actually money are from illegal resources. So money laundering is a result of any crime that is generated profit for a criminal involved. It knows no boundaries and jurisdictions where there are weak, ineffective and inadequate. Any money laundering and counter-terrorism financing legislations and regulation are most vulnerable. Of course, there is no less legislations and regulations. It will attract the money launderer, and money launderer should supposed to be go there and do their money laundering. Money laundering has significant economic and social consequences, especially if our developing countries and emerging market, because there is in developing countries you can say Pakistan and other developing countries, they don't have a much potential and much much rules. They are limited everything regarding to rules, regulations, and even implementations, penalties. So they are not effectively to control the money laundering. The easy passage of funds from one institution are a relatively facile system that allow money to be placed without raising any question is a fertile territory of money launderer. The upholding of legal, professional, and ethical standards is critical to integrity of financial markets. So these are few examples. I will explain how can it affect the economies. So increase exposure to organized crime and corruptions. How money laundering affect the increase in organized crime. Successfully money laundering enhance the profitable aspect of a criminal activity. When a country is seen a haven for money laundering, it will attract people who committed crime, typically haven for money laundering or terrorist financing have. Like I also before I just explained, limited number of predicate crime for money laundering, limited type of institution and persons covered by money laundering laws and regulations, little to no enforcement of laws and weak penalties are provisions that make it difficult to confiscate or freeze assets related to money laundering, limited regulatory capacity to effective monitor and supervise compliance to money laundering and terrorist financing laws and regulations. Undermine the legitimate private sectors. Money launderers are known to use front companies, businesses that appear legitimate and engage in legitimate businesses, but in fact controlled by criminals. So this is to recognize which is a criminal using this company, because front face is different, because mostly criminal what they did, they just registered the company with another person. Criminal mostly use these type of persons to register the company with their names and do the illegal business through that companies. So this is also a very big challenge for regulatory bodies like FATF, UN, and many other local bodies. So they are trying to develop more effective money laundering controls, but right now, as by my knowledge, it is really tough to recognize which is a legitimate and which is not a which is not a legitimate. So these front companies have competitive advantage over legitimate firm, as they have access to substantial illicit fund, allowing them to subsidize product and service sold at below market rate. As well, this is a big effect of this because of look, if any criminal involved in a legal company, their basic purpose is not earn money as a profit. They just want to show this money to he just want to make black money to white money. That's it. He don't care about the profit. Even sometimes he face some loss, and this loss is a big effect on the which is legitimate businesses, because they are also sitting for profit, not for this purpose. So this is also affect on businesses. This makes it difficult for legitimate business to compete against front companies. Clearly, the management principle of these criminal enterprises are not consistent with traditional free market principle, which result in further negative macro economic effect. Of course, it is a big macroeconomic effect. So, weak financial institute. How can money launderer affect the financial institution? Money laundering and terrorist financing can harm the soundness of a country financial sector. Of course, they can negative affect the stability of individual banks and other financial institutions. Such as security firms and insurance companies, because if any financial institution or non-financial institution did not follow the regulatory rules, they also face some legal penalties. So as well, it will affect the company performance. No non-compliance can result not only in significant civil penalties but also in loss of its correct. Of course, if ABC companies found as a money laundering, and a case will go in court, and after some time the case decided these companies are not found as a money laundering, but they face affected. People will as well think with the suspicious eyes. So it is also affect on financial institutions. So damping effect on foreign investment. Most of the developing countries is continuing their economic progress because of their direct or indirect foreign investment. So if that country is have much money laundering, so in this case, I think so people is not interested to invest the money, and this one is very big economic effect consequence of that countries. Although developing economies cannot afford to be selective about the source of capital they attract, there is a damping effect on foreign direct investment when a country commercial and financial sector are perceived to be compromised and subject to influence of organized crime. To main business friendly environment, these impediments have to be weeded out. And so next is loss of control, mistakes, decisions regarding economic policy. In the start, I explained how can money laundering affect the decisions, mistakes regarding economic policies. Due to large amount of economy involved in the money laundering process in some emerging market countries, these illicit proceeds may drop government budget. This can result in the loss of control of economic policy by government, or in policy mistakes due to the measurement error in macroeconomic statistics. Once any country print the money, one country print $1 million, but the money launderer suppose 200,000 money laundered, but in the money there is 800 $800,000, but government and there is countries calculate on the basis of 1 million, but there is 200,000 gap. So it will affect the decisions is make mistakes, because they calculate on the basis of 1 million, but actually in the market is 800,000. So that is the big effect of money laundering. Once any country make a decision, make a budget, make any other economic policy. So this is a major effect of the money laundering regarding to economic consequences. Economics distortion and instability. Of course, it will affect the distortion and instability in the economy, because money launderers are not primarily interested in profit generation from their investment, but rather in protecting the proceeds and hiding the illegal origin of the funds. Actually, money launderer basic purpose is hiding the money, hiding the illegal money. There is no basic purpose of earn profit. So sometimes they also sell out the product below the market rate. Once they are blending the money, they also they also have some legitimate businesses, and they also blend the money, and they are preparing a fake financial statements, and they are showing different statistics regarding to business, but actually is totally different. So this will as well affect the and harmful for to investors as well as businessmen. They invest their money in activities that they are necessarily economically beneficial to the country where the fund are located. Furthermore, to the extent that money laundering and financial crime redirect funds from sound investment to low quality investment that hide their origin, economic growth can suffer. So there is also economic consequences of loss of tax revenue. Of the underlying form of illegal activity, tax evasion is perhaps the one with the most obvious macroeconomics effect. Money launderer diminishes government tax revenue, and therefore indirectly harms honest tax payers. It also make government tax collection more difficult. This loss of revenue generally means higher tax rate than would normally be in the case, because of different penalties, different limitations. Government is not collect tax properly, because there is a money launderer is more active, and they also doing many other activities, and for developing countries it is very tough to collect as well tax as a revenue, because there is less regulations and less monitoring bodies. So it will also affect money laundering, also affect on tax revenue collection. Risk to privatization effect. Money launderer threats the efforts of many states trying to introduce reforms into their economic through the privatization of state-owned property, such as land, resources, enterprises. Sometimes linked with corruption or inside deal. A government may award a state privatization tender to a criminal organization, potentially at an economic loss to the public. If there is any country owned company, and the country going to privatization that company, and the company will buy any criminal with their illegitimate funds. So it will also affect on the economy, because that person is easily make dirty money look clean, because they also buy the company which is a state going to sell out. So reputation risk of the country. Once any country is got the label of these are companies, these countries are money laundering heaven for money launderer. So once reputation is going to bad. Its recovery is very tough, and because the people is not easily go to trust on that country once any international body is given like a high risk if I talk about FATF, if FATF give a like a gray black, then people is not going to trust easily, and it will very huge effect on the reputation of the country. So it more effect on the economy as well. A reputation as a money laundering or terrorist financing can harm development and economic growth in the country. It is diminishes a legitimate global opportunity because foreign financial institution find the extra security involved in working with the institution in money laundering haven is to expense. Legitimate business located in money laundering haven may also suffer from reduced access to markets, or may have to pay more to have access due to the extra scrutiny of the ownership and control system. Once a country financial reputation is damaged, reviving it is very difficult and requires significant resources to rectify a problem that could have been prevented with paper anti-money laundering controls. Other effects include specific countermeasures that can be taken by international and other countries and reduce eligibility of our government assistance. Next risk is risk of international sanctions. This one also very interesting slides. In order to protect the financial system from money laundering and terrorist financing, the United States, the United Nations, the European Union and other governing bodies are imposed sanctions against foreign countries, entities, or individual terrorist and terrorist groups, drugs trafficker, and other security threats. Countries can be subject to comprehensive and targeted sanction. Actually, comprehensive sanction is prohibited virtually all transaction with the specific country. Targeted is prohibited sanction with specific industry entities and individual list on OFAC specially designed national and block parties list. Actually, there is three type of sanctions: comprehensive sanctions, sectoral sanctions, and targeted sanctions. So here I only explain two because of this is more relevant. Once I go there later on, I will explain all three with the examples of sanctions. What is the example of sectoral sanctions, comprehensive sanctions, and targeted sanctions. So stay with me. I will explain later what is the different type of sanctions and why is they impose on the countries and what is the consequences of these sanctions and how recover the countries these sanctions. A failure to comply may be result in criminal and civil penalties. FATF also maintain a list of jurisdictions identified as a high risk and non-cooperative countries. Okay, FATF also maintain the countries according to rating. There is three type of rating: low risk, medium risk, high risk, and fourth one is non-cooperative countries. Also, FATF is maintaining whose AML CFT regime have strategic deficiencies and are not international standards. As a result, FATF call on its members to implement countermeasures against the jurisdiction, such as financial institution applying enhanced due diligence to business relationship and transaction with the natural and legal person from the identified jurisdiction in an attempt to preserve the jurisdiction and improve the ML. FATF only purpose is improve the ML CFT regime. They just want to stop money laundering and terrorist financing. There is only one point agenda FATF. They want to stop money laundering and terrorist financing. That's it. And they also follow different stops, and FATF also giving the different type of rating to the countries according to their implementation in their 40 recommendation. I will also explain later what is the 40 recommendation, how countries is going to implement it in their financial institutions, and how they are helpful for their economy. Next is social cost. Significant social cost and risk are associated with money laundering. Money laundering is integral to maintain the profitability of crime. It also enables drug traffickers, and smugglers, and other criminals to expand their operations. The drives up to the cost of government expenses and budget due to the needs of increased law enforcement and other expenditures. How can they bear the social costs, loss of profitable business, liquidity problem through withdrawal of funds, termination of correspondent banking facility, investigation cost and fines, asset seizure, loan losses, reduce stock value of financial institutions. Reputation risk. Reputation risk is the potential that adverse publicity regarding an organization, business practice, and association, whether accurate or not, will cause a loss of public confidence in the integrity of the organization. Like a depositor may withdraw their funds. Funds placed on a deposit with the bank may not be reliable as a source of funding. Once depositor learn that the bank may not be stable, depositor may be more willing to incur large penalties rather they leave their funds in a questionable bank, resulting in unanticipated withdrawal, causing potential liquidity problems. So, what is the operational risk? The potential for loss of resulting from inadequate internal processes in personal and system, or from external events. Such losses can be occur when institution incur, reduce, or terminate interbank or correspondent banking services, or increase cost of these services, increase borrowing or funding cost, are all are competent of the operational risk. Like if any correspondent bank just said stop their doing transaction with that the particular financial institution, so that is also operational risk, because any regulatory body found company ABC is found as a money laundering. Even they are started investigation, so correspondent bank and other financial institution stop the business with that particular bank or financial institution. So this type of operational risk also impact on the business of that particular companies. What is the legal risk? The potential for a lawsuit, adverse judgment, unenforceable contract, fines and penalties, generating loss, increase expenses for an organization, or even the closure of the organ. Yes, of course, if the companies not in this position to pay huge legal penalties, or they are increase their legal expenses, so company is going to close because of their face heavy losses. Reason because there is a lawsuit, adverse judgment as well. There may be investigation conducted by regulator and law enforcement authorities, resulting in increase the cost as well as fines and other penalties. Also, certain contracts may be unenforceable due to the fraud on the part of the criminal customers. Concentration risk. The potential for loss resulting from too much credit or loan exposure to one borrower or group of borrowers. Regulations usually restrict a bank exposure to a single borrower or a group of related borrower. So I will just explain with a small example. If a group of borrower or only one single person borrower, he just got the news, adverse news from social media, or or other media, main medias, and he just decided to borrow all the money which he deposit in the bank. So because of this individual decision, the bank or financial institution is going to liquidate, going to face heavy loss because of this sudden decision of that particular person. So this type of losses is risk is called concentration risk. So just want to say thank you very much for watching these videos, and